Hello, this is Paul Pappas from Mortgage Choice. Hope that you've all had a great start to 2022. Welcome to our first video presentation for the year. Today's a bit of a change for us, but a good way to start the year off in terms of providing you with a bit of an update as to what's been going on, not only in the property market, but also with interest rates. So where are we at today? Where are we looking at for the rest of the year? So let's get into it a little bit. So what's been happening lately? Fixed rates are definitely on the increase, and we started to see that last year. So where have rates gone? Where will they end up? And what's going to happen this year? So let's have a bit of a chat about that. Having said that, whilst fixed rates have been increasing, we've seen very little change in variable rates, and if anything, variable rates have been coming off a little bit. So quite a unique market characteristic we're seeing at the moment. As far as property is concerned, the city property market, it is still growing, albeit at a slower rate. And the market is still quite hot. And what we've been seeing, we've had a fantastic start to the year with a lot of our clients already buying in the first month of the year, in fact, in the first week of the year. So we're seeing some very good activity still happening. We're still seeing lenders still chasing dollars in terms of refinancing your loan and offering some good incentives. And we're still seeing lenders offering incentives of up to $3,000. So they are very keenly chasing your home loan business. So what's been happening in the Sydney property market? The current conditions are this, and that is late last year, or during the 2021 year, I should say, houses went up 30% across Sydney, units a little bit lower at 13%, but still very, very good growth in both the housing market and the unit market during the course of 2021, especially in houses. Strong levels of demand really was driving it. There were two things that were driving it really. Strong levels of demand by consumers being very confident, and also money was cheap. Whoops, went to the wrong slide. So that was really driving market conditions quite strongly. With interest rates, what are we seeing there? Well, interest rates at the moment, just a bit of a snapshot as to what's out there at the moment, and you'll see that the 1.99 specials that were out there for most of last year, the 1.99 specials for 2 and 3 year fixed, no longer available. So what we've got on screen there, I'll be honest with you, most lenders are offering fixed rates in particular that are about 0.25% higher than what's on screen at the moment. We've seen 2 and 3 year fixed rates move, in particular 3 year rates I should say, they're close to 3% these days, so a good 1% higher than where they used to be. Hasn't grabbed a lot of media attention, but we've already seen some upward movement in fixed rates in particular. Variable rates, as I said before, unchanged. So the gap between fixed and variable has widened, with fixed rates becoming more expensive. As far as investors are concerned, a similar type of thing. We've seen movements in fixed rates, variable rates remained unchanged. Again, these are some special rates that are available from some of our lenders. So to get these rates, whether you're a home loan borrower or an investor, you really do need to move quickly, because most lenders are not offering these types of rates. So if you combine these rates together with some incentives of around $3,000 to refinance, you really do need to look at these rates sooner rather than later. What do we expect for the current calendar year? Well, our bottom line is this, and that is, look, money's still cheap. Interest rates are still fairly low, relatively speaking. But they are going to be increasing. As I said before, fixed rates have already increased. Lenders are still increasing fixed rates. And we do consider still believe, I should say, that you should still seriously consider fixing a good chunk of your loan sooner rather than later. We do expect to see the banks to move outside what the Reserve Bank is going to do. We're seeing that already in the fixed rate market. Don't be surprised if banks move on variable rates as well. Let's not wait for the Reserve Bank to move. The banks will always do what they believe is in their best interests. Economic growth is still strong, despite the Omicron slowdown of the economy that we've seen recently, and some changes to confidence and so forth. The bottom line is this, and that is Australia's economic growth is still quite strong, and that will drive the market. We're going to see really good demand. We are going to see, and we're starting to see this, in fact we saw it last year, affordability issues. And because property prices have got more expensive, we're going to see a move, especially with first home buyers, moving back to units and away from houses. But the bottom line is this, and that is that the things that are going to be driving the property market is strong levels of demand with cheap money. It will continue to grow the market and property values, I should say. Affordability is going to be becoming the key issue with interest rates trending a little bit higher as well. The housing affordability situation, once again, I expect that to become a federal election issue. Once again, don't expect for a lot of change. Bottom line, as far as we're concerned, we still expect Sydney property values to increase, to continue their increase in values, albeit at a much, much slower pace. Probably half of what we saw last year, but who knows? The factors are going to be supply, meeting demand. It hasn't been able to do so, but we are seeing stronger levels of supply come on the market. Of course, money is still cheap, and interest rates will start increasing and increase the cost of mortgages and have an effect on affordability. So we are seeing, expect to see good property market conditions in terms of small increases in values with increases in interest rates as well. Interesting to see where we end up at the end of the year, but good all-round conditions. Look, at the end of the day, no matter what you're doing in terms of looking to buy your first property or even upgrade your property, talk to us as well. Whether you're looking at refinancing your home loan or investment loan, take advantage of some of these lower fixed rates and incentives that are around as well. But even if you're looking at buying your first investment property or improving your investment portfolio, please have a chat to us. Definitely love to have a chat with you, and wishing you all the very best for the rest of the year. Thanks very much. Thanks for tuning in. Bye.